Wealth. It's something we all strive for. It's a symbol of success, power, and security. But wealth can also be a source of great corruption and darkness. Today we're going to explore the dark side of wealth. Looking at one of the most shocking financial scandals that shocked the world. In the annals of financial infamy, one name looms large: Bernie Madoff. Today we delve into a story that rocked the financial world and shattered the trust of countless investors. This is the Bernie Madoff story. Bernard Lawrence Madoff, often referred to as Bernie Madoff, was an American financier and investment advisor. Once a respected figure on Wall Street who orchestrated the largest Ponzi scheme in history. Early life and career. Bernie Madoff was born on April 29, 1938 in New York City and grew up in Queens, New York. His father was a plumber and his mother a homemaker. Madoff graduated from Farley Dickinson University in New Jersey with a bachelor's degree in business administration in 1960. He started working as a stockbroker trainee at Bernard Kornfeld's firm, Kornfeld Securities, in 1960. In 1963, Madoff founded Bernard L. Madoff Investment Securities, LLC, with $5,000 in savings. The firm initially traded stocks and options, but later shifted to investment advisory services. Madoff's firm gained a reputation for generating consistent and high returns for its clients, attracting a large and loyal clientele. The Ponzi scheme. Madoff's investment firm was a facade masking a massive Ponzi scheme. Instead of investing clients' money in the markets, Madoff used it to pay off existing investors, creating the illusion of consistent profits. He maintained this scheme for decades, using sophisticated trading software to generate fake account statements and divert attention from the true nature of his operations. The rise to prominence. Madoff's firm grew steadily, gaining a reputation for consistent high returns. His fraudulent investment firm, Bernard L. Madoff Investment Securities, LLC, reported returns on investments that were too good to be true, attracting billions of dollars from individuals, charities, and financial institutions. His charm, coupled with a seemingly foolproof investment strategy, attracted a clientele of wealthy individuals, celebrities, and institutional investors. The fall of Madoff's scheme. In December 2008, Madoff's sons, Mark and Andrew, who worked at the firm, expressed concerns about the sustainability of the high returns and the lack of underlying investments. Little did Madoff's clients know that the success they were witnessing was a mirage. In 2008, as the financial crisis unfolded, the house of cards began to crumble, unable to meet withdrawal requests. Madoff confessed to his sons that the entire operation was a Ponzi scheme. Mark and Andrew confronted their father, and they agreed to report his confession to the authorities. Aftermath and impact. Madoff's Ponzi scheme had a devastating impact on thousands of investors, many of whom lost their life savings. The scheme also damaged the reputation of the financial industry and eroded public trust in Wall Street. The fallout was catastrophic. Investors lost an estimated $65 billion in principal and earnings. Many faced financial ruin, and charities, including those run by celebrities, were also devastated. The Madoff scandal led to increased scrutiny of the financial industry and reforms aimed at preventing future Ponzi schemes. The Dodd-Frank Wall Street Reform and Consumer Protection Act, passed in 2010, included provisions to strengthen oversight of investment advisors and improve investor protections. The trial and imprisonment. On March 12, 2009, Bernie Madoff was arrested by FBI agents and charged with securities fraud. He pleaded guilty to 11 federal felonies, including securities fraud, investment advisor fraud and money laundering, and making false statements. In June 2009, Madoff was sentenced to 150 years in prison. The man who was once at the pinnacle of Wall Street now faced a life behind bars. It was a cautionary tale about the consequences of blind trust and the importance of regulatory oversight. Bernie Madoff's story serves as a glaring reminder of the dangers of greed, deception, and unchecked financial power. His Ponzi scheme was a betrayal of trust that caused widespread financial ruin and tarnished the image of the financial industry. Bernie Madoff, the financier who pleaded guilty to orchestrating the largest Ponzi scheme in history, died from hypertension, atherosclerotic cardiovascular disease, and chronic kidney disease at the age of 82. He is survived by his wife Ruth. One of their sons, Mark, committed suicide in 2010 on the second anniversary of his father's arrest. Their other son, Andrew, died from cancer at the age of 48. As we close the chapter on the Bernie Madoff saga, let this story be a lesson to us all. If you found this exploration informative, don't forget to like, share, and subscribe for more in-depth insights into the world of finance. Until next time, stay vigilant and stay informed.